What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we're going to talk about the S&P 500 ETF, ticker symbol SPY. We'll go over some macroeconomic data such as earnings and initial jobless claims, and then we'll jump over to the technicals for the pattern, where it's trading pre-market, and where are those next key support and resistance levels that we need to watch today and going into tomorrow. As always, if you guys enjoyed this video, make sure to drop a like. It really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So right now the S&P 500 ETF is trading and we're down just about 55 basis points. The initial jobless claims also come out today, since today is Thursday, and the estimate is close to 1.24 million people to have filed for continuing jobless claims from last week. We'll also find out the cumulative number and where that stands for the people that are still getting the unemployment benefits. And then in terms of the earnings, if you were to look at the earnings calendar, you'll find that there's some really big companies that are reporting their earnings today that are going to affect the S&P 500 and the NASDAQ index that are included in those indices. So Johnson & Johnson being one of them, Bank of America, Morgan Stanley. If you were to kind of scroll down, you'll notice Netflix is on the list as well. So again, that's going to affect the market direction and where these indices go. So now looking at the ETF, like I've already mentioned, we're down close to about 55 to 60 basis points. So we're definitely gapping down. But if you were to look at the daily chart, if you've been following up with any of my previous market updates, you have a really good understanding on where our bear camp sits, where our more near-term bull camp sits, and then where our strongest support is. So looking at from yesterday's candle, we formed a doji, which was a form of indecision in the market, and essentially trying to figure out where the market wants to go. That being said, we did breach all the way up to our bear camp right here at $323, which we have tested previously on June 8th, and then we got rejected, gapping down all the way to $300 level, which is where our strongest bull camp sits. We pushed up, got rejected here at around 315 for the S&P 500. That level is going to be 3150 to 3155, and then got sold off again down to the 3000 level for the S&P index and the $300 level for the SPY. We made our way back to that level and then eventually broke out on July 6th. And since then, we have just been consolidating in this range, and we switched our bear camp at 315 to being our bull camp, because every time the pattern was below the $315 level or the 3150 level for the S&P 500, people saw that as a really good dip buying opportunity and pushed the S&P higher to close above the $315 level, right? Which is what this represents. So this continues to be our strong bull camp, and moving forward, you also can see that this right here is where the higher low sits. So this ascending trend line that you guys see is kind of like the higher low that I've identified, and we've essentially been bouncing off of those levels going back as far as April of 2020. You can see how that has been a validated support. So now moving forward, if you were to extend that line and you were to kind of look at our bull camp, this is where we will find support eventually if the pattern were to retest this level. So now looking at the 1 hour chart to understand where the pattern is trading and what's going on pre-market, you can see that this right here is where the market's opened July 16th at 4 a.m. We essentially gapped down, and now we're just trying to kind of curl back up to retest our resistance at 323. So if you were to go back into the chart, you'll notice from Monday, July 13th, we approached that level. So we hit a high of $322.71 for the SPY ETF, and then saw this huge sell-off down to 315 of close to 2.5%. Over the next few hours, after hours, we essentially were consolidating and found a good support at our bull camp, which has been validated multiple times at 315, and then eventually made our way back to that resistance, going up close to 2.5 to 3%. And then again, yesterday we got rejected here for the second time. So now the question is whether we're going to test resistance or we're going to test support, because the pattern is essentially trading in between this range. You can see that we are just trading right here. Now if we were to push up to test our resistance, this is going to be the fourth time we're going to be testing resistance, and to find out how much pressure, how much downward pressure is coming in from the bears, because you can go back as far as June 8th when we did approach that level, got rejected, and then twice more recently going back as far as Monday and yesterday when we did approach that level but then got rejected again. But if you do pull back, we are back testing our support and revalidating our more near-term bull camp at $315 level. If you were to break below that level, then I find support right here at the ascending low, or the higher low that the pattern has been making, right around $310 level. And I personally don't see the S&P dropping as low as 300 or the 3000 level for that matter, because that just seems to me a very far-fetched scenario, but I could be wrong. Because you never know, anything can happen in the markets, and right now, again, we're down close to 60 basis points, and if we are eventually able to break out of this resistance at 323, the next resistance is going to sit at 332, and this is from back in January of this year. And this next resistance at 338 is going to be the all-time high for the S&P 500. So if you were to go back into the chart, you'll notice that this right here is from back in January, 332, the next resistance, and then the all-time highs sit at 339 to $340 level. So to give you guys a quick recap on what we just talked about, right now the S&P 500 is gapping down close to about 64 basis points, so it's definitely selling off and is showing some weakness. That being said, the next resistance in the bear camp sits at $323 right in this red rectangle, which we have previously gone rejected at. The next near-term bull camp or support sits at 315. So those are some levels that we need to watch and see which one is going to test first. And if you were to break below 315, the next support I see is going to be on the higher low, or the ascending low that the pattern has been forming at 310. So I hope you guys enjoyed this video and my quick technical breakdown and the morning update. We again need to watch for the initial jobless claims. That's going to be an important piece of data that's going to affect the markets, along with the earnings report from all these big companies. As always, if you guys enjoyed this video, make sure to drop a like. It really helps out with the channel. Subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.